we have the earnings of Axis Bank that will come out later today. The expectation is that it will come out after the market hours, but let's just run you through what's expected from the Q3 results of Axis Bank. Now, net interest income, which is the difference between interest earned and interest expended, is expected to surge by about 8.6%. Now, that is on a year-on-year basis to 12,555 crore from 11,560 crore in the year ago period. Profit, that is expected to increase by about 4% to 6,114 crore from 5,853 crore in the year ago period. Net interest margin, now that is expected to contract by about 20 basis points to 3.9% from 4.1% in Q3 of FY23. But to discuss what's expected from the Q3 print of Axis Bank, let's also bring on board Mr. Mohit Gang, co-founder and CEO at Moneyfront. Good morning, Mohit. Thank you for joining us here at News 9. What's your expectations from Axis Bank? So far the results from the large private banks have been good as far as the headline numbers are concerned. Asset quality has improved. But there is of course concerns about margins shrinking with all, at least the big private banks like Kotak, ICICI, HDFC Bank, to name a few. And do we expect a similar trend with Axis Bank as well?
Hi, morning Suyash. Always a pleasure to be on your show. So look, I think the results season so far has been very well in the line, except for I would say HDFC Bank, but ICICI Bank was quite a good result, and the stock is already showing signs of that in the morning trade today. I would assume that the Axis Bank would follow suit the trajectory of what ICICI and Kotak have done. My sense is they would give us a beat on the profit numbers, especially the PAT numbers, and overall on the revenue growth. Even the CASA margins should hold stable or slightly improve from what they have been showing. And I also think the slippages number, which has been a good show across all banks, will continue to be a good story for Axis Bank also. Along with that, I think the merger with the or merger, or let's say acquisition of Citibank should start showing up in the overall numbers of Axis Bank, and I would assume that the asset quality should improve because of that merger, and also the fee income should improve because of that merger. The only concern area which has been a trend across the private banks is the NIM compression, which we have seen, and I think for Axis we are expecting around 20 bips of compression, which you have also shown on your screen. I think that's also happening across the banks per se, because the deposit repricing has been a phenomena across the board owing to elevated interest rates, and I think that would likely continue for next quarter also. And post which we should see some stabilization on the NIM front and maybe some improvement thereof. But my sense is this is a trend across the banks. So overall, I think 20 bips of compression as well, market will take that happily. My sense is that.
All right. And a lot of this credit growth, that was coming from the unsecured lending. And as we know, RBI has in fact tightened the noose by increasing risk weight on such loans. Now, will that lead to some quarters of pressure on margins as well?
I think that's leading to the overall story of margins. Somewhere it is all factored in basically. So RBI has tightened the screws on many fronts. It's not just the unsecured lending part, also the provisioning for AIFs, which is happening across the banks, is also one of the things. And that number is also fairly significant,
Right.
which we saw in the case of Kotak also. Right. So I think RBI tightening the noose is a fairly good thing for the market from the overall health perspective of the banking system in the country. Because as markets continue to see a rapid bull rise, right, I think some areas and some sections will continue to develop froth. There could be unabashed lending to segments which hitherto are prone to defaults or are prone to not paying up on time. So my sense is RBI is doing the taking the right steps, and those things are reflecting on the banks' numbers. But I think it's all in good stead for the overall health and positivity of the entire sector put together. So I think results should give us a positive uptick, and Axis Bank has continued a good trajectory. If you see for last 3 odd months, it's actually outperformed the bank Nifty, and I would assume it will continue the trend going forward also.
All right. And moving on, the big story for at least yesterday and today's is that Sony calling off its $10 billion merger with Zee Entertainment. Now, my question over here is, of course, we have seen a big correction in the stock of Zee. It's down about 10%, locked in the lower circuit. But who gets hurt more here? Zee, because of course it's losing on a lucrative deal with Sony, or Sony, which perhaps was looking at a partner to make a foray or at least bolster its presence in India.
Look, Suresh, I think there's no dearth of entertainment in the Zee Entertainment saga, to be very honest. I think the story has gone through many twists and turns, and it's like a pot boiler, which one could expect from two media companies. Honestly, I think it hurts both. Just to answer you on that front, it hurts Sony because if Sony has aspirations to compete with Viacom and Disney, which are likely to come together pretty soon, then it also needs a lot of ammunition under its belt. So my sense is, I think from Sony's perspective, it could have become a big challenger to the to the Viacom Disney conglomerate, which is about to come. Perspective, I think it is extremely hurtful. It is extremely hurtful because honestly, Z's number have not been very encouraging of late. They are struggling to consolidate their revenues. They're struggling on the profitability front. Their debt levels are high, and I think this overall thing has somewhere dented the sentiment around this entire deal, and which is quite evident on the stock. And my sense is it won't stop here. It's a falling knife and it can fall to any extent. So, but yeah, look, on the other side, I also think there is something more to this entire thing, this entire saga than that meets the eye. Look, only on the ground of the MD not being as per what Sony wanted. I still found that could have been resolved amicably if that was the only conditionality of the entire thing which was obstructing the deal to go through. But my sense is there are a lot many reasons which perhaps we might know in future or we might never come to know. But yeah, there are underlying reasons for it, and I think from a Z's perspective, this is extremely bad unless someone else comes out and bails them off now from this situation, which also is a likely outcome. If the stock corrects to a reasonable level, I'm sure there could be some bidders available in the market for this kind of a property. And from Sony's perspective, it could have actually consolidated its market position, which perhaps is extremely important in a market which is now rivaling OTTs and other threats to its existence, right? So I think it's hurtful to both, but for Z, it is extremely painful.
All right, that's a view on Zee and Sony Saga. But before we let you go, Mohit, Medi Assist Healthcare, now that has listed at a premium of about 10%. The stock got listed on both NSE and BSE at 460 rupees per share versus the issue price of 418, slightly ahead of expectation. Market was expecting a premium of somewhere around 5 to 8%, so a better than expected listing for sure. But is it a long term hold, or should one look to book some bit of profits after that 10% sort of gains at listing?
Look, Suresh, my personal take would be to take off the profits off the table if you are already if you've got some allotment on the in the IPO. Look, market is extremely bullish right now, and everything is going upwards with the rising tide. This is slightly. I would say the stock is listed at a premium, which is great, but it is listed slightly ahead of its fundamentals. Honestly, it's very expensive at these levels for the kind of business it is in, which is an asset-light business. I understand that, but it's a business which can be disrupted anytime, right? And those kind of valuations perhaps are a little overstretched to my imagination, and I could be wrong on this one. But I would still try and take off my profits and try and enter the stock with a long-term perspective only at lower levels.
All right, that's Mohit Gang for you. Mohit, thank you for joining us here on News 9. Always a pleasure speaking to you.